Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, October the 22nd, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, I want to start off today looking at the Dow Jones Industrial Average. We're going to go into a lot of stuff here today, so pay attention. First off, you got the pullback today in the Dow Jones Industrial Average, about 14 points to the downside, but notice the slow start, tick to the upside. Telltale sign you expect a little bounce to the upside to come Monday morning, okay? That's what I'm expecting. I do expect this high to be taken out. Bottom line, the Fed is out there. They've got a, uh, you know, bit of news they're going to drop on the market, which is going to, spike the market. That's, you expect that. But I want to talk about that news because what's going on right here is we sold off substantially as people realize, wait a minute, our recovery is not as robust as hoped for. There's potential for a double dip. You've got the problems in Greece, Spain, Portugal, Ireland, Italy, etc., etc., etc. So we know about all this. So what they said is, oh, let's start talking QE2 and get this market back up here before the elections. That was the theory, at least. All right, so here you bounce back up here. Now, the QE2 they're doing here is basically devaluing the dollar, right? All right, this isn't new to us. We've played this game before. In the 1930s, we had the same problem we have now, the fundamental problem of debt. Okay, that had to be paid down. It was a global credit crisis back then. Germany defaulted on their debt, and we went into the Great Depression, right? It was sometime later before we realized it. But before we went down into the Great Depression, we realized that there was potential for it, okay? Just like we do now. We see a potential for a double dip. So back then they said, I'll tell you what we're going to do. We're going to enact our own tariff that will, make our in the U.S. The goods and services more appealing on the global market. The problem is that doesn't work because we don't actually live in a vacuum. So other countries simply said, well, we'll enact our own tariffs. Okay. At the end of the day, our tariffs didn't help us in any way, shape, or form. It just made the problem that much worse. But when the news came out, markets were up on, hey, a tariff has a great idea, and then it just blew up in our faces. This time around, we're so much smarter. We're much smarter, and we've decided to devalue our currency. Why? Because it'll make our goods and services that much more appealing on the global market. Well, only if you live in a vacuum, which you don't any more than you did back in the 1930s. So what actually happens is other countries come out and they devalue their currency as well. Uh-oh. Wait, doesn't this sound familiar? Well, sure, but don't tell anybody. Okay, one thing to note about this that is very interesting is that Europe's not devaluing their currency. Now that's interesting because first off, when you first look at that, you say, why would you not do that? You're going to be a sitting duck. You're going to get hammered. You're going to lose out on all kinds of deals because your currency is more valuable than or higher price than the next guy. So you're not going to get all the business, which would put more pressure on the pigs issue and then the credit crisis you have over there, wouldn't it? Absolutely. So why are they not devaluing their currency? Because they really can't. They've already gone out there and told their people, who are now a mob of people with pitchforks and and all that stuff. Uh, they said, hey, look, we're going to pay you less and we're going to give you less. Vote for me. And now they're going to come back out and say, by the way, we're also going to devalue your currency. That what you have is going to be worth less. Yet, I don't think anybody wants to make that political error. Okay, so they're kind of stuck between a rock and a hard place. It may end up where they have to do that in the future anyway. But ultimately, this is the scenario we have built up here. Okay, the market is rallying on the news of the Fed. Okay, making their QE2 announcement and so forth and so on. But it won't change your economy in any way, shape, or form. It didn't in the 30s, and it won't this time around either. So what you're seeing here is a news burst. That's it. That news gets played, the game is over, and we go back to reality. Has the devaluing of our currency actually improved our economy? No, because other countries simply devalued theirs as well. It's just a game we're playing here. It's buying them some time, nothing more, nothing less. There are still opportunities on the long side out there in the market. There are some on the short side as well, more on the short side as a matter of fact, and both of these are making you money right now. The difference is knowing how to spot them because they're few and far between, but they're out there. You can go to our free website at perfectstockalert.com. We've got a trading course here, a swing trading course here. It teaches you how to do that. It's very important that you know what it is you're messing with. Otherwise, you could find yourself buying into an opportunity that is not necessarily an opportunity. It's just a rising tide lifts all boats kind of thing that whenever this thing turns on you, it will just vanish. The opportunity will kill you. So beware of that, okay? That's probably the best advice I can give you in this market right now. That's what the Fed's propping this market up, but the reality is it doesn't change the fundamentals. It doesn't solve the debt problem. It doesn't change the fact that we're still going to have to continue with this austerity measure, even in the U.S. here. We know about the 50 states that are in trouble, etc., etc. So nothing new, okay? quick look. Let's move on to the rest of the markets. Main thing here is look for that blip to the upside, and that was indicated today by the slow stotch. Okay. Okay, I want to bring up the attention of gold to everybody. Here's the deal. A lot of people have been waiting and waiting for this guy to pull back to get an opportunity to the inside. But as markets grow stronger and stronger and more people want to get involved there, it's quite common to see the slow stretch pull back down and then before hitting that 20 line, reverse course back to the upside, making you miss the opportunity, at least short term. Okay, so you have to be on guard for that. And anytime you see a pullback that then shows a hammer formation, you have to say, wait a minute, it may be here that they reverse course. Well, now we've got this pullback here. The slow slide just pulled back down close to the 20 line, and you're getting a hammer formation right there. So those of you guys that are short-term traders, you're looking for an entry opportunity into gold, you can check this out on our website at perfectstockler.com and the free what's it called, video chart school or something like that. You can go over there, click on that, and you will find two basic trading strategies, and they talk about trading the hammer formation, how to set the stop, and so forth and so on. So you can check that out. It's there, all weekend. You've got nothing but time anyway. So check that out if you're interested in trading that kind of thing. And even if this one breaks down and you get another formation here, a hammer formation at this point, you'll want to use that information as well. Again, it's a really good strategy for using it. Okay, pretty cool, pretty simple. Okay, quick look here at the FTSE. She did the same thing the Dow Jones Industrial Average did today, pulled back down about 16 points here, and you'll notice the uptick in the slow stotch. Okay, you look for that guy to try to make a move to the upside. That would make sense to me. And again, these guys are doing the same thing everybody else is doing, riding the old Fed pony higher until the news is out, and then the game is over. But again, check the volume. If it's less than it was the last time we're at this level, people are not more confident. They're less confident to buy it. Why? Because it's bogus. All right. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, have to thank everybody. I forgot to do this. A couple days ago, we crossed 3,300 subscribers on our YouTube channel. We appreciate that support. It helps us stay free. That means a lot to us. You guys have been referring your friends, sharing our videos online, and we just wanted to say thank you very much for that. I'm going to keep working our tail off for you. Also, speaking of which, this weekend we'll be making that transfer of our website from the shared server to the dedicated server. That'll take us a little bit, but we'll get that taken care of, and the site will be much, much faster, and all kinds of new cool stuff will be out there as well. All right, cool, awesome. All right, a quick look at our disclaimer. The disclaimer, read it and weep. Okay, a little announcement to make here. We've altered our site a little bit on the swing trading course. We've set it up so that we can email the videos to you. That makes it easier. That way people don't have to re-register every single month if they want, it doesn't make any sense. If you've already registered for it, why should you have to register every single month just to watch the same video again? That's not cool. So what we did is now we can just email it to you. You'll have access to it completely whenever you want it. All right? Pretty cool, pretty simple. Check it out. God bless, take care, enjoy your weekend, and be safe.